Hello, everyone. Thank you so much for joining us again on our Tuesday education webinar series. Today, we have the absolute pleasure of being joined by Sharon of Condo Quest. You can't see Stephanie, but she is here as well. And Sharon has been, her Condo Quest has been in business since 2009 and has been helping buyers and sellers with their understanding of their condo documents and making sure that they're making educated choices. Sharon as well is incredibly involved in the community with the condo associations to ensure that protection for consumers is number one. So Sharon, I'm going to pass the floor over to you. And then we're going to open it up for questions afterwards. If you have questions in the meantime, write them in the chat. I'll take a look at them, as well as I'm checking our comments on Facebook. So we can go from there. So Sharon, the floor is yours.
Thanks very much, Alex. Good morning, everybody. Thanks for being here. I started Condo Quest in 2009 because I saw a need for candid, comprehensive looks at corporate condominium corporation finances. Condos are businesses. They can succeed, they can fail, all dependent on decisions made by the board of directors. I incorporated in 2013, and I have to tell you that my initial success was driven almost exclusively by Maxwell offices and Realty Executives offices. And to this day, I offer, sometimes you have to remind me, but I offer a 10% discount from our advertised pricing. In honor of that, I'll always honor Maxwell. And when you got together with Realty Executives, well, that just kind of blew my mind, but I'm forever grateful. It doesn't matter how long it's been. I honor the Maxwell and former Realty Executive offices. So today we're talking about what to look for in condominium financials. And though I don't recommend that anybody, any agent, go too deeply into the condo financials, but I'll tell you what you can look for. Continual operating deficits, operating accounts that are in deficit year after year after year, and a couple $1,000 that can happen. That can happen almost any time. Your costs are never going to be the same from one year to the rest. But when they start getting into the tens of thousands and they're carried over from year to year, you know there's some trouble. You might want to look for liabilities, look for loans from external finance companies. Generally, major banks don't lend money to condominiums. And so over the last decade, external financiers have popped up and sort of waiting in the wings and forgive my language, but they're sort of waiting for a deep pocket to fail, like a condo. And then they step in, and then you've got the potential to draw negative attention from commercial insurers and commercial lenders. These people can flag certain condo complexes and refuse to participate in transactions. So those are some of the things that are going on with more prevalency now in condos than they were, although actuaries have been studying how to balance risk, particularly in commercial insurance, which includes condos, for many, many years. There's a couple of myths in condo sales that I'd like to address. There are occasions when I'll hear somebody say, well, there have been lots of sales in the building. And that's kind of a false way to look at things. I mean, at this point, my involvement says that probably only 3 out of 5 condo buyers go the extra step of engaging with a company like ours. It's about the same price as a home inspection, and many people will weigh it in hand and determine what they think is more important, and they go with that. I think they're both very important, but nonetheless, so if a majority or close to half of condo buyers don't go the extra step of employing somebody to look seriously at the financials and look at the business of the corporation from physical and financial perspectives, then, like with many big decisions, it's an emotional decision and they may move forward anyway. So the idea that there might be lots of sales in a building is not an indicator of the success of the business of that corporation. Myth number 2 is low condo fees. In my mind, when I see an information statement or a MLS highlight sheet that shows low condo fees, it's an indication that the board of directors is not making can be an indication that the condo board is not making the best financial decisions. There is no benefit to low condo fees if you're walking that group of owners straight into special assessments. It's also my impression, based on years of experience, that boards are reluctant to raise condo fees even when necessary, because some owner in that building is going to scream at them or write nasty things on Condo Genie or wherever they may have discussion forums. And that's generally because condo owners themselves aren't highly steeped in the business of condominiums. So those are two things that I take with a grain of salt when I hear them, from an agent or somebody out on the street, or even somebody who just generally writes the company with questions or asking about our service. So as many of you know, if you own a condo, or anybody owns a condo, or you've sold or assisted in buying condominiums, several years ago, the commercial insurance industry took drastic steps, although it's been building for many years. And the price of some commercial insurance premiums for condominiums skyrocketed, staggering increases that tripped or triggered automatic condo fee increases in the hundreds of dollars. They triggered special assessments. There are now, there are lots of places for outside entities to step into condo business, and financing of condo insurance policies is now a thing. So just like the commercial insurance industry cracked the whip when it comes to water damage, and now they can automatically charge back corporate insurance deductibles. The huge flaw in that, although it is bringing attention to boards and owners about water damage, keeping their eyes on, on their plumbing, reminding them that they're responsible in most cases for zone valves and any equipment in a mechanical room. At some point, they did get what they wanted, and they got the attention of owners and boards, and people are generally being more careful about it. I'm starting to worry that mortgage lenders and mortgage insurers, companies like CMHC and Sagan and Canada Guarantee, and the major lenders, I'm talking about the traditional banks, TD and ATB and RBC, these more traditional lenders are starting to make what I think of as arbitrary and unfair decisions on whether or not they're going to participate in condo transactions lending. I, as recently as about 60 days ago, I was informed by a client and their agent that a major lender had refused to participate in a transaction and lend toward a specific complex that had been constructed in 2018. So, no, I'm sorry, constructed in 2016. It wasn't handed over to an owner-led board of directors until 2018. And that's when, of course, the corporation starts to gather reserve funds in a trust account for major future repairs and replacements of common property. This lender decided arbitrarily by looking at a financial statement that there simply wasn't enough money in the reserve fund. And again, in my opinion, it was entirely arbitrary and unfair because the corporation had only been gathering reserve funds for about 4 years. They had something around $300,000 in the bank. They were following the benchmark recommendations from a reserve fund study. And like I said, the commercial insurers cracked the whip. I'm afraid that at some point in the future, mortgage lenders and mortgage insurers are going to crack the whip as well to balance their risks. CMHC, there was an article summer before last that of their entire portfolio in Canada, which is of course billions of dollars, the portion of it that was condos at that time, 70% of condos were what they called it, like underwater, risky. They were worried about it. A lot of people, just giving up due to huge special assessments being levied. Sometimes because the corporation on a historical basis simply didn't put enough money in the bank. And when I hear that banks like TD are making these arbitrary decisions by only looking at a financial statement, that worries me, because that was entirely unfair to that condo corporation, who was doing as well as could be expected. So these are my concerns for the future, and I hope that as clients and agents cross my desk here and there, the condo documents thing can be extremely trying. It's a lot of back and forth. Sometimes, one or other of the parties isn't entirely prepared or understands these documents and why they're important. But I'm asking you guys, well, Maxwell agents, I think have a pretty good understanding of this already, but I'm trying to tell everybody in this space that again, it goes right back to condos are businesses. They can succeed, they can fail. And in most cases, somebody like me can trace it back years to condo boards being afraid to raise condo fees, even when their operating or balance sheets start to show deficits of revenue. These are really big topics. I think this is a good place to maybe allow you to ask questions of just any kind of condo business generally. Again, I thank you for sitting through my little screed, but as time moves on, we're going to see much more, particularly here in Alberta, where our legislation is a little bit loose. You're going to see other players that I'd rather not see in the industry making decisions for your clients without your participation, without participation from somebody like me who could justify why that particular complex didn't have enough money in the bank, or didn't have a lot of money in the bank is the better way to say it. So thanks for listening, and I'll take questions if you have them.
Yeah, so I've opened up everyone to have the ability to speak. You are all muted, so if you do have a question, You won't be shown on screen, but you can ask away.
Hi, this is Lori Green. What's your thought on older condos, like say ones that were built in the 1970s in Chinatown kind of thing? Long term, this is in Calgary. Like long term, what do you see for the future of that kind of building?
Okay, so that's a great question, Lori. When I see a building, especially if it's a tower or a mid-rise, because those are inherently, they come with more inherent risks. Townhome complexes that might have 6, 8, 12 primary buildings, they can attack big common property projects with a block of buildings at a time or a certain number of buildings. So when I see, and there are several of them downtown, there are towers that are, just lovely. But one of the first things I look for is to determine if it's a conversion. There is a big, beautiful building downtown that I'm not going to name here today that was built in 77, operated as a rental property until about 1982 when they condominiumized. But then you've got a group of owners and a board of directors who have inherited a 20-year-old building, and they haven't begun their reserve fund saving for future repairs and replacements. Developers are not required to begin a reserve fund. And so you're starting off with a 20-year-old building and you've got major repairs on your lap and you've just formed your board of directors. There are a lot of complexes, whether they be towers, mid-rises, or townhomes, that are in beautiful historic kind of neighborhoods in Edmonton. And what I see a lot of is sagging or broken sewer lines. If you're looking at a lovely, more historical sort of neighborhood in Edmonton, well, you know that the infrastructure there is aging as well, and nothing lasts forever. So older buildings have some inherent problems to begin dealing with. But if they weren't conversions, and that's towers and mid-rises, very seldom in townhomes, you've got to go pretty aggressively initially to start saving money and build a path toward success, that where your owners aren't facing special assessments every time there's a major project, or looking at special assessments in the tens of thousands of dollars per unit. Did that sort of answer your question, Lori?
Yep, that kind of covered some of the things I was wondering about. Yeah, thank you.
You're welcome.
Any other questions?
And here, I'm just wondering if there's a certain number, or if there's some kind of an equation that we can use to determine what is a healthy reserve fund, given the number of units.
That's a very good question too, Joanne. And there is no rule of thumb. Each you could have two maybe towers side by side anywhere. They have different amounts of common property, square meters of asphalt paving, roofing. They can be entirely different, although the buildings look the same. Generally, a reserve fund planner, or which is usually part of a reserve fund study provider, will tell you that the reserve fund should be somewhere between 30% and 70% of the amount that it would take to replace all of the common property at once. So, and I will tell you too that reserve fund, there's no one through line for reserve fund planners when it comes to how much money should be in the bank. Condo boards can sort of sway a reserve planner to get them to reduce the numbers, because then they don't have to increase condo fees, and you run a little closer to what I think is a pretty fine line on whether or not you've got enough money. So no, there is no rule of thumb. And although I place a little more stock in some reserve fund study providers than I do others, the safest place to go is to the cash flow projection. In the most important information in any reserve fund study is the first 10 pages and the last 10 pages. Last 10 pages usually contain the cash flow projections, and look at that particular fiscal year that you might have a record for, and just see if it sort of aligns to some degree. But that's not a hard and fast way to look at it either, because sometimes you'll have to replace a little sooner, roof a little sooner. Sometimes you get a couple extra years out of it. So that's always fluid and sort of dynamic, but that's kind of the only guide you're really going to have.
Great, thanks.
You're welcome, Joanne.
Hi, it's Corey Cooper, the Cooper team.
Hey, Cooper team, how are you?
Good, Sharon, how are you?
I'm well. How can I help?
I just had we have a condo listing downtown.
Right.
One of my team members, and we had a couple of offers on it, and the first one they wouldn't finance on it. I believe it was a TD Bank because of the area and the age of the building, and it was only 1978, but it had some good renovations to it. Right now, do they blackball because of? No, it's a tower. No, I think it's a 4-story.
A mid-rise. Okay.
Yeah.
Go ahead.
They blackballed it because of the age and the area it was in. Is that a common thing, or is that? And as far as I know, CMHC didn't have it flagged.
Well, this is a rising set of circumstances, Corey, that is exactly why I'm here today. In my opinion, banks are making arbitrary and unfair decisions about stuff like this. And if we don't get a better sense generally as a population, as buyers, as sellers, as professionals in and around the industry of condos, if we don't get a better grip or understanding on the business of a corporation, this is going to happen. And it's funny you mentioned TD, because they're the same. I think they're the ones I'm hearing most of this about. And I just don't know how to stop it. Now, part of my job here is to lobby different industries or groups associated with condos, like Service Alberta, about what needs to change, the lack of protection for owners, lack of oversight over condos. I tell people all the time, there are no condo police unless you're talking to me. And nobody's listening to me, although we do participate with Service Alberta in project teams, but it's not going anywhere fast enough. And this is beginning to happen now in a much more vocal or noticeable kind of way.
Yeah, because that really is going to affect a lot of people that own these and aren't able to sell them, right? Because most people don't have the cash. Yeah. So something has to be done about it, I think.
Well, it does. We're writing as fast as we can, trying to. I think at some point, the industry I'm in right now is going to be regulated. I think it should be. We're gonna become more important. But let me tell you, we are still pro condo. They are the least expensive form of first home ownership, a wonderful option for older people sizing down. but it's going to take a collective fight to stave off some of these, I don't know, sort of, they feel like intruders to me, coming in and making these arbitrary decisions. I don't know exactly how to approach this, Corey. But
I think
I'm open to suggestions.
I think maybe the government should step in and say, if they fit all these guidelines, all these parameters within the parameters, you can't turn them down, right? I mean, I guess the
Well,
banks have the right to do what they want. They've always been quite greedy, especially in Canada, but I guess that saved us from the subprime. But I think they have too much power at times, and they
you're
affect
absolutely
people's lives.
You're absolutely right. And I, I'm thinking another thing that could help change this industry is, and I don't necessarily see it happening immediately, but I don't believe personally that you should have to put in an offer on a unit in order to get a look at the business of the corporation. And I am encouraging all agents to be more, get more friendly with your in-house mortgage professionals or anybody that you have that might help you with information. And it's going to become more and more critical if you sense something in the documents, or you might even hear from somebody like me saying in a private note to you, circumstances exist here that could have raised or will raise red flags at organizations like CMHC, and now increasingly banks stepping in. So, but we're here in the Wild West of condos, Corey.
Yeah.
We don't have a lot of regulation. And although the big business of condos, or the big business of anything, gets a lot of voice here in Alberta. So I hope that you're right, and that something happens here before this gets devastating to owners and current owners and potential sellers and buyers.
Agreed.
Yeah.
Great
So
question, Corey.
if anybody out there that has any kind of suggestion, I'll take it, but rest assured that I see this as a serious warning, just what's gone on in the last 5 years about, the and it starts, we could meet in the middle if people at the top could start sort of looking at this from a broader perspective, and people at the bottom, actual condo owners, understanding the business of the condo. Something could happen somewhere in the middle that would save us all a lot of grief.
I have a recommendation. You're all part of CREA. You're all part of area, and you're all part of a local board. They all have political action committees. You are more than welcome to voice your concerns to the political action committees that you are members of through your associations, and also speak to your current members of parliament and your MLAs to voice your concerns.
Outstanding, Alex. Thank you.
Do we have any other questions for Sharon? No, it doesn't look like we do. So with that being said, Sharon, thank you so much for coming out today and shedding a little bit more light on the financials of a condominium and what to look for, and kind of the peril that's potentially coming upon us if some things don't change. But I think the biggest takeaway from this was call the insurers early on in the process if you're looking at listing a condo to see if the building is flagged. That might save you a lot of headache down the road if you know the building is already flagged by one of the insurers. And then you can talk about different strategies that might go along with it if needed at that point. Or you know who to market the property to, someone that doesn't need an insurer. So that would probably relieve a lot of stress from both your sellers and your buyers if you speak to the insurers first.
And
Agreed, Sharon?
just on that note, like who would you talk to at CMHC? I mean, it's a big place, so who do you ask for?
Okay, so I'm not entirely sure now. I've heard some agents say that they couldn't get that kind of answer. I'm not sure. I think what you need is call the general 800 or 866 number here in Edmonton.
Or Calgary.
Oh, or so just reach out and give them a call. If you've ended up at the wrong address or the wrong phone number, just ask them. And I'm not sure it needs to be every single time. But you know, if you are going to look at the financials, and especially if you know there's a loan, that's when you need to make that call.
Yeah, in Alberta, only CWB and ATB are the only two that are still lending to condo corporations to assist with their special assessments.
That's correct. But those special assessments, again, like usually come on the heels of historic inattention to the amount of money that should be in the reserve fund. And, you know, there are sort of more private existing outside that are stepping into this market as well.
Yep.
So before everybody goes, if you don't mind, I just want you to know that you can pick up the phone and call me right to my email if you have a question. If you own a condo, if your mom owns a condo, your kids own a condo, it doesn't matter where the question comes from. Some of my favorite part of this job is to take a question, get out of my chair, put some steps on my Fitbit, and have general condo conversations. I am pro condo, and I want to see better practices in some areas that you or I really don't have much control of. But if you have a question, if I don't have an answer, I know the authoritative organization that can answer it for you. And I invite you to ask questions. And it doesn't matter to me whether there's an invoice or you're a buyer or a seller's agent, or you simply own a condo. I invite those questions. And you know, you don't know what you don't know until you start asking. And that's how I got where I am today in this space, which is, you know, there's relatively few companies, but more and more companies are stepping in to do this as well. Bottom line here is I want you to ask questions. And if I can help, it doesn't matter if there's an invoice attached to whatever I'm saying, call me. And
the good news is you can find Sharon's contact information in Max Central approved suppliers. Search up Condo Quest. You will see Sharon's contact information, as well as the reminder that Sharon is kind enough to offer 10% off to any Maxwell Realty associate that whose clients use Condo Quest's service. So
absolutely, and don't hesitate to remind me. Sometimes we get busy, and I'll correct an invoice or just remind me. And if you know, if you have a senior, anybody that needs that little bit of extra help, we can negotiate that a little bit too.
Well, that is very kind of you, Sharon. And thank you to everyone that participated today in today's webinar. If you're listening to us on our podcast, thank you for listening. Please subscribe for more. Watching us on YouTube, hit the subscribe button so you can be kept up to date on our future education webinars. And if you're watching this live on Facebook, thanks so much. See you, everyone.
Thank you.
Thank you.